The share is under pressure here in the after-hour session. What do you think people are focusing on here most?
So, they did beat in the December quarter, but it's always about what are you going to do for me next? And while the revenue guide was a little better than expected, the margin was a little bit lighter for the guidance. So I think, people are concerned that maybe the Warner Brothers Discovery deal does have something to do with the long-term growth outlook that the management has that might not be as rosy as investors had. I don't think that's yet the case. I think that'll still take time to bear out. I think there's a lot of opportunity on the advertising side. And generally, I have a buy rating because I think the stock has fallen too much. But now that the news is out, this is a sell on the news event. But I don't think it's deserved from a long-term perspective.
Yeah, it does get to that question about valuations. I was actually surprised at how low the shares were, at least relative to where they were last year. I mean, this is a stock that's basically been under pressure since the last couple of earnings reports. When you look at the spending numbers, though, the idea of increasing spending on content by 10%, which in and of itself wouldn't be a huge issue, but you overlay that with the Warner Brothers bid, does that concern you at all, that might put further pressure on its valuation?
Well, they need to spend to attract and retain viewers, and it needs to be a global perspective. They do have to compete against a number of other parties for the content. So the spending is important. But I think that you have the potential for Warner Brothers content coming in, but that's still going to be 12 or 18 months out. They did just sign a new Sony Pay One deal through 2032, which is global. So they do have access to a lot of content. But I think that this is a case of kind of forgetting in the short term that the company does need to start out the year under promising so they can over deliver. So I think that there could be room for some more margin expansion as the year plays out, but we do also need to see them post the advertising growth and the top line growth and the margin expansion. So I think right. It's we're in a show me kind of state, so that's why the shares are trading down a little bit here in the aftermarket.
Well, to that point on margins, the company says that they see, quote, plenty of room to increase margins. We'll see if that comes through. When it comes to the ad business, the company also said that they see about a doubling of ad revenue in 2026 versus 2025. But as you said, we're in sort of a show me stage when it comes to Netflix. And if you don't know the base number, how useful is a qualitative metric such as that?
Well, we've triangulated on what we think they're generating. We think they did $1.5 billion in the fourth quarter and did $3.1 billion in 2025. We had them growing the advertising by 2/3 next year, or 67%. So, the guide that they would be doubling it actually should be viewed positively. I think that's something that helps to show that their ad tier strategy is working. Their strategy in France of having more live programming is working. Their sports strategy is working, and that's where some spending is being allocated. And it all is heading in the direction of driving up user engagement, which is an area where they've been lagging versus YouTube TV, for example. So I think that the ad guidance is a positive for the long term, because that should generally be lifting its overall ecosystem as we look out several years.
And it's interesting, David, you take a look through some of the commentary, again, waiting that interview that the company does in lieu of their earnings call. But there's a lot of focus on some of their non-English series, their shows that have performed particularly well. And when you take a look around the globe, I mean, how big is the potential addressable market here for Netflix, and how saturated is it already?
Well, they have well over 300 million subscribers globally, so there is still room to expand in a lot of markets outside of the U.S. beyond what they've done. The U.S. is fairly mature at this point, but you do have some uplift in subscribers as the password sharing strategy has been taking hold for the past year and change, which has also resulted in more ad tier subs and therefore more advertising. So I do think that there is more penetration to come, internationally in Asia, maybe less so in Europe and the Middle East. But I think that those are still going to be some some good new long-term growth areas. And part of the reason that they are investing more in that local content from those regions is to drive that very engagement and expand the user base.
I am curious on the engagement side, and I'm glad you bring that up. They got a little bit of a criticism after the success of K-pop Demon Hunter seemed to take them a little bit off guard, and there were a lot of questions as to why they pulled it from the theaters so quickly. I know they set up Tudum and some of these other sites that are supposed to kind of keep the fan base active and engaged, even in between, whether it's a series like a Bridgerton or something like that. Do you see them investing more in that, if not money, certainly more time and effort?
I do think that they have a view to using the theatrical releases as part of their overall marketing vehicle and something to drive up engagement. One of the things that they'll be probably talking about some more on the call is the upcoming Narnia movie in November. That'll be on IMAX first, then it will come to Netflix. So I think that they're still learning how they can integrate with the various outlets, for the content that they have access to. The bigger tentpole kind of productions are more and more likely going to have a theatrical aspect to it. It helps. Again, in the visibility, the marketing, the voting process to win awards. And that also would play well into their strategy with trying to win the Warner Brothers Discovery deal and get that through the regulators.